Karishma Asoodani now joins us on the broadcast to, in fact, simplify this further for our viewers. Karishma, very good morning to you. Before we get into the specific sectors, I would quickly take in your word as to how we are looking at these very reductions in an overall manner first.
Well, it's been for last 2 weeks that we have been reporting these news breaks, and we've been bringing the information to consumers of the fact that government is wanting to boost consumption in the market, and it's purely a festive cheer following Prime Minister Narendra Modi's announcement. The announcements have been on the well-expected lines because we had learned that the GST regime overhaul will now only see two rates, that is 5 and 18%. And a special rate of 40%. In all clarity, a lot of items have seen a major reduction when it comes to the 5% slab. A lot of items have been moved from 12%, and a lot of items have moved from 28% to 18%, bringing in a lot of relief. But two big challenges that were highlighted, and we've been talking about these challenges for a while now, is one, was it a smooth transition, smooth acceptance by the states yesterday? Let me tell you, not exactly, because there were a lot of negotiations, but Finance Minister Nirmala Sitharaman reiterated in the press conference that she's thankful that the state finance ministers in unison accepted the reforms. Most of them that I spoke with told me that they did raise the question of how will this 48,000 crore revenue implication be compensated, to which the center has shared that they are confident of the buoyancy that will pick up because of these cuts that are about to come. Second big challenge is the 40% slab. A lot of products now will be taxed pure 40%. It's a special tax for sin goods, luxury goods, or demerit goods. The states had requested for an additional levy on that, but the center has yesterday clarified that nothing beyond 40% will come. So this is it, a simplified tax structure now, 5%, 18%, and a straight 40%. We have to see post-compensation cess ends, how will the 40% slab be treated, and when could that begin?
Absolutely. Karishma, I'll come back to you. Since you have spoken about the 40% slab, let's just quickly take our viewers through what all falls under that ambit. It's a higher GST for sin goods. Now, earlier it was 28%, and now we see it coming up to 40%. What are the items included in this? Carbonated drinks, cigars and cigarettes, caffeinated beverages, paan masala, motorcycles, which are over 350 capacity. Again, no added cess on sin goods at this given point that we are looking at in terms of the GST reforms that's come in. Karishma, I will come back to you, and while you have spoken about the sin goods and how the 40% slab, or rather what shall be entailing in this 40% slab, let me also ask you about the auto sector. What all, in fact, or rather, what is the impact of these GST reforms on the auto sector at this point that we're looking at?
Actually, there has been a lot of rebate when it comes to auto sector. Most of the considerations, if we look at details and specifics, have actually come under the 18% slab. But high-end luxury vehicles, which also actually was expected out of the group of ministers on rate rationalization meeting that happened a week back. It was expected that high-end luxury premium vehicles will actually be charged under the 40% slab, and that has what come in, where motor vehicles with both compression, ignition, internal combustion piston engine, and electric motor as motors for propulsion of engine capacity exceeding 1500 cc of length has been moved from 28% to 40%. Now, let us understand the ideology behind doing this. And this, I can vouch to share this because I've spoken to a lot of state finance ministers who said that the whole idea of including high-end premium luxury vehicles in the 40% slab was because the council is of the idea that that a lot of demerit goods or a lot of high-end premium luxury goods were underpaying a lot of taxes, and while they were paying on the highest slab of 28%, they were also paying for an additional cess. Now, while that cess will go away, we're assuming likely by October, because that was what we were told, but there has been no confirmation on that. After that cess goes away, it would demerit the revenue implication of keeping them in the 18% slab, is why they were moved from 28% to 40% slab. Now, the difference is that they will still pay less. So even if you're going to buy a high-end luxury vehicle, say after a few months, you will be still paying a bit lesser, because earlier with compensation cess, you were close to paying about a 50% GST tax, and now you'll only pay a 40% tax. So overall, it's been a cheer for the auto industry. It was on the expected lines that electric vehicles will see a jump, especially the ones above 20 lakh will see a jump to 18%. But the council clarified yesterday that all EVs will be charged at 5%. They'll be continue to be charged at 5%, which is also cheer during the festive season for people to buy. So 18% is the common taxation for the auto sector, which is going to be a big boost for the sector.
Right, Karishma. Karishma, thank you for, in fact, putting that into context for our viewers. There has been a lot of questions in terms of how each sector is going to be affected.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.